All right, welcome to Money Never Sleeps. This is a show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And I want to go over something that's been happening, very important stuff. Okay, everyone's seen it all over the news. That Hollywood's looking to make a movie about it. Wall Street Bets, Reddit, what happened with GameStop and what happened to AMC. And look, the reality is, and what's happening with silver too. What's up with that? The bottom line is, and I've been saying this for the past few days, okay? Um, going into last week, I was talking about this, and this is like engulfing the show, but it's important, all right? You know, the, what happened with Reddit, what happened with this whole thing, it's interesting because it put the retail investor in a different light. I need to really paint this picture. Okay, retail investors aren't going to, on their own, through Reddit or anything else, going to go and really change each and every stock, each and everything, and push things up and stuff like that. You may do it for the moment, but sustainability, it's not going to be there. What this did, it was a fundamental change in how retail investors are perceived. Okay, hedge funds, their job is to hedge. They hedge against things, of their positions or the market or whatever the case may be. The the issue that I've seen is that, and I said this, and I'm repeating. I'm going to sound redundant, but it's important. Okay, hedge funds have their place. They're institutional investors are needed there. Capital reserves is the game. If you don't have the capital reserves, you can't go and get things done. You have companies that have great fundamentals, but they get beat up a little bit. It happens. Problem is that the short interest should not be more than the stock that's out there. How is that even possible that any clearinghouse, that any brokerage firm can go collectively lend out enough stock out that you can have a 250% short interest in a company? That's crazy. It's crazy. Now, shorting in itself is not a horrible thing. You know, People do that as long as they can borrow the stock, right? If an investor that as at a brokerage firm doesn't want to lend the stock out through DTC or other, they don't have to. They can stop. They can just sign something, fill it out, whatever, put it out there, and say, I don't want to let anyone borrow my stock. It's fine. Okay, but they need to do that. Otherwise, the brokerage firm can do what they want to do. Now, I heard a lot of nonsense about, well, if someone shorts naked, they have naked shorts out there. SEC has all these things in order. It'll flag them. They'll get knocked out of the box immediately. But if that's the case, you tell me this: how? How is it possible that the short interest in GameStop could have been at one point 250 something percent? And AMC 130%, whatever the case may be. Short interest at 60, 50, 40, 30, 70, well, even up to 100%. Okay, great, I get it. That means you borrowed all the stock. Where do you go from there? Can't keep shorting it. How is that even possible? If you're shorting it more than what's out there, it's a naked short. Any which way you slice it and dice it. Okay, so they should look into that. Again, shorting itself is not so much of a bad thing because the bottom line is it keeps people in line. You can have companies out there that are doing, yeah, bad actors, right? Companies out there that are going and they're doing something wrong. Okay, and if a hedge fund sees it, an institution sees it, they can go and act on it and say, hey, this is smoke and mirrors. We're going to go short. We're going to hold a short position, and this is what we're going to do. They can do this. All right. However, you can't, going and shorting a company only because it's the flavor of the day or the flavor of the month, and you're going to go and collectively with other institutions go and have a raid on a company. Come on. We've seen movies made about this, and that's something that should have stopped 30 years ago. And it still hasn't. You have companies that do this and they short the heck out of a company. And then what happens? They may be a great company, but they get shorted out. They can't raise capital. They can't do this. They can't do that. And they can hit a brick wall. It's not fair. Okay. GameStop, 250 something percent short interest. Okay, great. The stock, retail investors came in, shot the stock to the moon. And I said it last week that that's not the solution, because all that happened there, you took people out of their position. Yeah, you hurt a short. You hurt a short, but if you think for a second, that same short then doesn't have a friend that's doing XYZ and went short again, okay, at the height, even at 350, at 300, let's say, at 280, let's say, okay, they made back whatever they lost. So the bottom line is, you have to have fairness in the market. In the markets, fairness. There has to be. Okay, I think that the retail investors with the Reddit trade and everything else, I think it had a fundamental change on how retail investors are perceived. I don't think they're going to be taken for granted any further. I think that you're going to have a lot of things change. You're going to have hedge funds that are going to be hesitant to go and short a particular stock, a particular issue. They may short a market, they may do that type of stuff, but as far as a particular issue, they're going to think twice before they do it, because now they're being kept in check. So the Reddit situation, granted, people are going to get stuck in a trade. You had them jumping on the bandwagon, but all in all, what they did is that they brought a little fairness to the game, and that's what's needed. SEC has to finish the job. They have to, not allow any brokerage firm to even collectively especially, to go lend out stock they don't have in safekeeping. You don't have it in safekeeping, you can't go lend it out. That's the way it should be, and that'll keep some honesty in the markets, right? Now they jump to silver. Now I said something about this too. And you're going stocks, is one thing. Equity is one thing. Commodity is something different. Different game altogether. Yeah, you got to be careful with that, because you can lose it. You can lose it. Then you see trading places in a second, you can lose it all. Now silver, the CME, they have margin requirements. At any given second, they can increase that, decrease it, do whatever they want. They see some craziness going on. Boom, bat, boom. They did it today. They raised it, what, by 18%. They can go and increase it further. Okay, people are taking physical delivery of silver. Great. You're paying the high prices. I think silver 15, 17, yeah, that's where it should be. In the 20s, not so much. 20 at max. Okay, that I see what the value should be. Where it is right now, it doesn't make any sense to me. And people on message boards going and pushing it. I think it's a big boo-boo. You're not going in, you're not cornering the silver market. People have tried. People with really, really deep pockets have tried, and they went to jail doing it. They didn't. It didn't happen. Okay. Bottom line is, you can't, control a commodity, and doing that, you're cornering a market. You're doing something that is not only unethical, but pretty illegal. You can't do that. Fair trade, fair markets. This is what we're looking at. So people may think that the Reddit trade, what happened, failed. It really didn't. People made money, whatever. That wasn't the purpose. Purpose was to say, hey, we exist. We're here. This is what they were saying. We're here. We have a voice, and we're going to show you we have a voice. It wasn't so much about GameStop. It was so much that these retail investors grouped together, and it's like, they were yelling out the window, we're mad as hell, we're not going to take it anymore, and that's where we're at. So fundamentally, things have changed somewhat in that space. So the hedge funds can't go run the game. They can't go short and do things with impunity. Okay, they have a watchdog right now. So if you have a watchdog watching over you, you're going to be very careful what you do, because they're going to see it. And you have some pretty smart people. Some of these guys that you see on the Reddit trade, yeah, you have a lot of retail investors, but I guarantee you have some real smart people that are involved there, that are doing things in a big way, but they also want fairness in the market. You have fairness in the market, everyone has a shot, and that's what it's about. Anyway, with GameStop, said it. GameStop has value with what's going on in gaming. Gaming's not going away. With virtual reality, augmented reality, all this stuff, mobile gaming, you're gonna have a lot of things going on. They're gonna have a place. They're not like Blockbuster and Netflix. None of that situation. They have that opportunity for growth. I said it already on yesterday's show or the day before, and I said it that if with GameStop it going in dropping to 150 even $75, I can see that happening. However, at the end of the day, I think that maybe 125, 150 is fair for the company. I think it's going to grow. I think if you believe in the company, you stick with it at this point in the game and you let it grow. All this noise, all this nonsense is going to dissipate, and the fundamentals will speak for themselves. All right. Now that's it. Oh, and let me just before I leave you guys, AMC. I said it already. I said it on Twitter. I'm saying it now. Okay, that company is going to take a year or two for it to even get back together. Hollywood's not in full production. A lot of things that are really, now you have VOD, you have a lot of things going on. AMC, it's a bad, bad hold. If you believe it, hold it. But you know what? You're buying it at 5, 6, 7, 8, $10. You're going to be at the losing end because this stock, if it went to $1, I wouldn't be shocked. Okay, it may come back later. So buy it. You buy low, you sell high. You don't buy high and hold on and let it go and into the gutter. But again, with GameStop, if you have it and you believe in the company, you stick with it, right? When you stop believing in the company, when you see something fundamentally is wrong with it, that's a different story. All right. Anyway, that's it for this episode of Money Never Sleeps. Thank you guys. Thank you guys for tuning in, and I'll be back with you talking about some other stuff later on this week. Thank you.